Markets are bleeding, not because the charts told us, but because there is a potential war about to break out in the Middle East. As you guys know, there is a escalation between Iran and Israel, and this is what's causing markets to not only cascade liquidations and people both that are shorting and long in this market, but it is what has brought prices down to prices we haven't seen in months. And there is a potential buying opportunity that just laid itself out. So in today's episode, we're going to be breaking down exactly why these escalations are taking place, what it means for your portfolio, your bags, but more importantly, where is Bitcoin heading now that we got a pre-halving correction? What is its next stop, and what does that mean for altcoins? Let's go ahead and just jump straight into the market. So Bitcoin, of course, sitting at $64,300 at the time of this recording, with Ethereum at $3,100. Now, if you follow me on Twitter, you would know that we actually ended up picking up a massive bag, $50,000 worth, 15.5 ETH worth of Ethereum on this current dip because we were looking for a swing trade. But what's going on right now in the most recent, this is as of maybe 5-6 minutes ago, of the events happening in the Middle East, is Iran threatens immediate and widespread retaliation if Israel does decide to attack and respond to Iran's barrage of missiles and, of course, the drones and everything over the weekend. This is all what set prices down. Now, some people are already coming out and pulling out the charts saying that this was predetermined in the charts. People were expecting this massive 50-60% pullback. They were saying markets were way oversold or way overbought, way too greedy, which I do agree with. But what is taking place in the Middle East is not something that is as easy as saying, yeah, we predicted this. Nobody could predict what Iran or Israel are going to do in the near term. And that is proof based off the historical references. If you guys don't know, we've been manipulating Iran for a long time. The United States, the CIA, they've been funding Iran. Most recently, they've had multiple grant programs through the National Endowment for Democracy, which is legitimately a subdivision, a charity branch of the CIA that has been funding massive activists in Iran itself. But this doesn't come, of any surprise with what's taking place, because the CIA publicly admitted for the first time in 2013 on August 19th that they were majorly involved with the coup d'etat in 1953 against Iran's elected prime minister. Now, I don't know if you've seen old videos of Iran, but it actually was very modernized before everything that happened with the CIA in the 1950s. This, of course, has led us to events that are now known as the Iran-Contra affair, which is one of the largest scandals in U.S. history under the Reagan administration. This is where, often referred to, again, as a scandal, was a political scandal in the United States that occurred during the second term of the Reagan administration. Between 1981 and 1986, senior administration officials secretly facilitated the illegal sales of arms to Iran, which was subject to an arms embargo at the time. The administration hoped to use the proceeds of the arms sale to fund the Contras. Now, for you guys that don't know, the Contras were various U.S.-backed funded right-wing rebel groups in South Africa in 1979 to the 1990s. And this is a group under the Bolin Agreement. Further funding of the Contras by legislative appropriations was prohibited by Congress. But the Reagan administration, guys, they decided that they were going to use a loophole and secretly use a non-appropriated fund instead, which is very similar, again, to what we're seeing take place at the National Endowment for Democracy. Take it as you will. Now, most recently, this is still happening today with U.S. grants, while U.S. is granting, or this is actually recent, but U.S. grants Iran sanctions waiver worth $10 billion. So latest developments, the Biden administration renewed a sanctions waiver on March 13th, 2 days ago, when this event took place, that granted Iran access to $10 billion in previously funded escrowed funds. The waiver, which allows the Islamic Republic to use electricity revenue from Iraq for budget support and debt repayment, comes just 6 weeks after an Iran-backed drone attack killed 3 U.S. service members in Jordan. The Biden administration last extended the sanctions waiver on November 14th. So, yes, this is a very clear situation that benefits no one. No one ever benefits from war, even though they're trying to play this big dog moves or whatever it is that Israel is trying to do that's just straight up embarrassing. embarrassing because we know the truth. This is all operated and funded by the military-industrial complex. The U.S. is funding both sides of this war. We've been funding and giving these weapon arms to Iran for decades, and now we are funding Israel upwards of $300 billion over the last few decades, and not to mention everything with the pullout of all of our troops most recently in the Middle East, leaving just billions upon billions of dollars in equipment to be traded both on the black market and used by current facilities. Now, it's just without a doubt, this is what we're seeing, guys. There isn't much media covering this, but as pointed out by Quiver Quantitative, everybody I recommend should follow this. On October 13th, we published a report on a purchase of Raytheon stock by Senator Mark Wayne Mullen. This trade stood out to us because Mullen sits on the Senate Armed Service Committee. That stock has now risen 41% since October of last year when this was announced, and politicians who oversee this should not be trading defense stocks. Guys, politicians are just inside tradings. These guys are complete cucks. They don't give a fuck about you. And they're going to do everything in their power to just make sure wars last as long as possible. It's not about winning a war. It's about getting the funding for the war. That's how these stocks purpose themselves. And it's proven when Raytheon straight up came out in Q3 of last year and said, this is terrible. U.S. weapons makers tell investors to expect big profits from the Israeli war. Yes, corporations that specialize in manufacturing weapons are excited about the war on Gaza, letting their top investors know that the huge profits are on the way. So a ramp up or an escalation to a large-scale conflict in the Middle East, Raytheon and these companies are just loving it. This is where their profits are coming from. This is exactly what they want. And this is why when we look at the charts, guys, you'll notice that the dollar is running massively right now. So is gold. Historically, gold and the US dollar are reversed. They're inverse. And that's because when the value of the dollar goes up, it takes more dollars to buy gold. And so traditionally, when the dollar's rising, gold's dropping in value. However, right now, when you see the US dollar running, you see gold up, you see the Nasdaq, you see everything up across the board, the bonds. This is because people are moving to safe haven assets, risk off assets. And in the case of this war, we are starting to see Bitcoin follow suit just a little bit. However, I do not believe this is over. I think we are going to come down to very specific ranges, and this is where I am setting up this rest of the video. Where should we buy these altcoins? What is the opportunity in these markets? What are the exact altcoins you should be picking up, and what should you be staying away from? Because the only thing, I'm not going to pretend I know what Iran's going to do. I sat through massive Twitter spaces all weekend long, and every single geopolitical analyst is kind of they're conflated. They're arguing. They're saying, yes, it can escalate. It's very, very possible. They all have percentage points. Most people believe it wasn't going to happen in the near term. They think it's going to get pushed off. They think this is just a simple kind of flex, and that the Biden administration is somehow going to be able to definitely back down Israel and, of course, probably fund them even more money, which will benefit, of course, these military-industrial complex stocks like Raytheon even more. But what I would pay attention to is the Strait of Hormuz. This is where all eyes are on right now. If the Strait of Hormuz, which is between Dubai, the UAE, which I'll be flying to today, and Iran, is shut down by Iran simply sinking a commercial tanker or deciding to just, take advantage of that strait, could disrupt 25% of all oil production worldwide, which would be detrimental to inflation, energy, and of course the cost of inflation and goods and everything in the United States. It would cause everything to bounce. So the United States is going to do everything in their power to de-escalate this situation, especially as they approach elections. I mean, the Biden administration is 3 for 3 now. I don't know if that's a world record for presidents with how many conflicts we've been a part of or seen escalate under an administration, but that's a pretty significant number here and very ironic. But either way, the stock market today, guys, is starting to rebound, and Bitcoin is getting a reversal. So Bitcoin just got a full-on World War III scare and went down like 10% and wicked back up in 24 hours. This is coming from Alex Becker. In 2021, Elon Musk would tweet something mean about Bitcoin, and we went down 30 to 40% for months. This time is literally different, and I couldn't agree more. You have Jelly coming out and saying Bitcoin is consolidating, and this is where now most Bitcoin analysts are saying, hey, this is actually really, really healthy. We are consolidating at its previous all-time high range. This is a great depiction from a mustache here, El Crypto Professor on Twitter, where he shows that in 2017, you'll notice that every time we are about to break previous all-time highs, for example, in 2020, 2021, comparable to 2017, we consolidated right below that all-time high for a few weeks before ripping and breaking through. Again, all-time high of 2021, we're consolidating right now, same exact pattern, which is almost alarming. It is not different too much whatsoever. Look at the COVID 2020 crash. We had the FTX crash. Now we just had a bit of a dip, only 10%, but was a cascade of liquidations from this World War III scare. Now, on top of this, you have Bitcoin has successfully protected the range lows of reaccumulation ranges as the week of Bitcoin halving begins. More bullish TA factors showing that we are in a range of consolidation, which tends to mean we will see a move higher in the coming weeks, of course, post-halving, which everybody, I think, watching this video right now is bullish long-term. I am a long-term bull, but I make sure I risk manage and adjust my portfolio as needed when it comes to market conditions. I'm going to show you guys my plan in just 1 second. Now, what's also really, really bullish to me is for the first time, you saw this on April 13th, for the first time in months, we had a negative funding rate, showing that, again, markets have been put in a position where they're actually able to move higher without being overbought. So there are some key levels we need to watch, which right now is that $73,000, $75,000 range. You could see the mass amount of liquidations opening up above us. And then, of course, right below us, it's going to actually be right above me here on this side. You can see that there is a significant amount starting to open up around $55,000, $57,000 Bitcoin because there are people panicking and shorting. There's a lot of people shorting, and these bears continuously get wrecked. I don't know why people keep shorting Bitcoin, because most people shorting Bitcoin aren't actually intelligent, and they don't have stop losses, they don't have take profit zones, and they'll see their portfolio in a mass amount of position and then get wicked out by market makers very, very quickly. Because again, bears, they just... in crypto, for whatever reason, they believe that they're going to be in a bear market forever and they're going to hibernate forever. But we are in a bull run. We've been in a bull run and they continue to lose here. Also, looking on the high block liquidations, we are looking to get a bit of a reversal here. That is the red that is showing up in the bottom. We are looking at, again, the windshield wiper to move prices back up, wiping out all these shorts. Shorts are stacking up above us, but this does not leave us safe, because this specific zone that I'm highlighting right behind me is going to show that there is an imbalance right now. It's $61,200. At the time of this recording, this has not hit. I'm trying to get this out as fast as possible. I do believe we will fill this EI here, this imbalance. We tend to always hit these. Let me go ahead and move my face here. Yeah, you tend to always hit those imbalances. All those imbalances are filled historically on these charts on the daily. So we are not out of this correction just yet, and is why I think it's very important, if you haven't bought into this market, the people buying at 73K, I told you guys, I warned you, the top of the AI market, we took nearly $100,000 in stablecoin profits, over 75. I used a bunch of that to buy Ethereum. I still have a good amount that I have deployed now into a few other altcoins over the weekend. If you guys are in the Discord, the Telegram, you guys would know exactly what we are picking up. But I'm going to be dollar cost averaging into the top altcoins, because for the first time we have seen, even though the fear and greed index I believe is way off, we saw people in mass fear over this weekend, people saying it's over already, like Peter Schiff coming out with his 20K Bitcoin remarks, bears coming out and saying it's over, called the market top, this is it, we're going down to zero. And now we are starting to see an opportunity from these altcoins. Some of your favorite projects, we called Render's top on the day. Go on Render right here, right? Let's go to Render. It's at $9 right now. Let's click on the network error, because there's too much alpha in this video. Make sure you guys smash that like button and subscribe to this channel, you beautiful animals. I don't know why this isn't low. Let's go to CoinGecko. Maybe just because CoinMarketCap sucks. But, you know, we are starting to see price points on your favorite altcoins. They're down 50%, 40%. Like, people were lining up to buy Render at $12, $13, $14. At the top, I was called stupid, hated on. Go to the videos where on March 17th, I sold everything. Opsecure, Chlor. We sold out of all of our AI in DPIN that week leading up to that all-time high of $13. I do believe it almost touched 14 though. on that given date. And people are like, no, Josh, you're dumb. This is going to go higher. This is going to go to $40, $50, $60. And now it is down by over 40%. In fact, it ended up dropping. I want to get the exact range here. Let's pull it up on the charts here. Down by, what was the bottom? This was 55%, 56%. Now you want to sell? Now after a 50% pullback, you want to sell out of your positions? That is so retail oriented. That mindset needs to be pivoted. I actually don't understand it, right? Top of the market, everybody wanted to buy. Top of the market, everybody was like, Josh, you're dumb. We're buying more AI. AI is going to the freaking moon. We sold out of all of that. Now that we're down by 40, 50%, you're telling me it's going to go lower? That is the moment in these markets. That is the psychology of the markets. It tells me retail is scared, and that this fear and greed index, it happens so quickly because that's how retailers react. They react. They don't proact. They react. So if some news event comes out that scares them, like a potential World War III, this is going to force them into a position where they panic sell and then immediately buy as everything start pumping again. So I do believe we probably hit around a 50 range with that fear and greed. It is so overextended though because we are in a bull run. It's going to be really hard to pull it back down to this price point. But as it stands currently, again, we have that imbalance below us. I believe we might get a retest of that $61,000. We are in this new consolidation phase. And when we look at this, here's your consolidation pattern. We could be maybe forming a bit of a bull flag here. It is a little bit slanted, but more importantly, I think we are in just a consolidation phase, and we will be bouncing back and forth between these two ranges until ultimately breaking out. So this changes my sell 90% of my portfolio. The black swan event of what just happened with Iran. Who knows? Maybe they shorted Bitcoin at $70,000 and they just profited another $300 million because they're smart. Yes, I said that. I wouldn't doubt that actually occurred. If you had the opportunity to move markets like that and you're already doing illegal things, and why not? Why not short Bitcoin? Because the SEC is not going to go after them anyways. They're out of their jurisdiction. Either way, though, what I would be doing right now in my portfolios is going to CoinMarketCap. I would be buying spot or on like 1x, 1.5x leverage with a very, very tight stop loss. All right. And I would be dollar cost averaging into portfolios. Let's go pull up CoinGecko again. So right now, this is the opportunity to pick up your favorite top 100 projects that are down 40, 50, 60%. Let's go ahead and actually, I do want to pull CoinMarketCap up because CoinMarketCap has the best customization filter with the 30% here. Let's click on the 30 days. Let's hit -2 right here. 53% Wormhole, Bunk down 49%, WorldCoin down 48%, Thor 42%, Floki 42%, Save 41%, Uniswap 40%, Injective 40%. This is your opportunity. If you had that watch list, now's that time to dollar cost average into these positions and potentially even pick up some of your favorite watch list projects. So, as it stands, what do we have? ChainSwap's actually seen a nice little bounce here as well. My last 30 days, Based here is down 67%. We're down probably about 50% on that average in. Injective here, though, 41%. I'll probably add to as well more of. CeeLo's down 36%, although we're out of that trade. I do need to remove that from the watch list because we did enter and exit that trade. But look at this, guys. Quick swap, Ordi, Clore, Polygon Matic, 71 cents. This is your opportunity. And so I want to be jumping in completely. Again, we can't predict if something's going to happen in the Strait of Hormuz. We can't predict if Israel is going to go against everything that's happening and actually go for a large-scale response to what Iran did. But what we do know is if you simply set your stop losses and dollar cost average into these prices are 40 to 50% better than they were 2 to 3 weeks ago. And that is the takeaway from today's episode. This is the post-correction halving I was expecting. You guys know we were waiting for a cascade of these liquidations. I thought it was going to come after this halving coming this week. But this black swan changes everything. And now it's all going to depend on the escalations in the Middle East. Guys, be prepared, be safe, dollar cost average, and let's make some money. I'll see you at the top.